creation in India has expanded significantly. India's investor community has matured rapidly. The questions that are being asked today are more nuanced than what they were about 5-6 years back. Not just where to invest, but how to construct a portfolio that can do more than just track the market. That's the conversation that brought everyone into this room today as well. Our panel today explores exactly that, but a little bit more. We're going to be talking about the unconventional ways of investing. And I have three extraordinary minds to help us unpack that. Let me call upon the first panelist on stage, Mr. Ankush Jain, Fund Manager and Director at StepTrade, a CFA charter holder managing over 300 crores across the Chanakya Opportunities Fund and the StepTrade Revolution Fund. Next, we have Mr. Akhilesh Chaturvedi, Director and Chief Business Officer at Motilal Oswal AMC, 26 years in asset management. A person who knows perhaps better than anyone what investors across India are actually asking for right now. And our third panelist today is Mr. Ashish P. Somaya, Executive Director and CEO at White Oak Capital. 25 years of experience across strategy, product, and investment management. A practitioner who thinks deeply and speaks freely. Thank you so much. Put your hands together for all three of us panelists. And of course, it's me who's the lucky one chosen to moderate this. So I'm really looking forward to that. Thank you so much. I'll just take a minute to mic up. Okay, so three remarkable perspectives is what we're looking forward to right now. And Ashish, I'm going to ask you first. Are there any labels anymore in the market when it comes to today's more evolved and mature investor? Are they looking for your traditional means of investing, or is there more that they're really asking for? Or is it all blurred lines?
I think, over the number of years, there has been clearly a transition because, say 25, 30 years back, everybody was investing directly into equities. Then at some point in time, mutual funds became the mainstay, right? And then, you saw PMS, and then you saw AIF, right? And now you are seeing more and more prevalence of alternates. Now within AIF also, people generically use the term AIF, but obviously you know that AIFs can do right from venture capital to mix of listed and unlisted. You can have obviously real estate, and you can have multiple different asset classes. So I think 2-3 things have happened. One is that as the level of wealth or the amount of money which is there per wallet, so as the level of wealth rises, I think the expectations also start to rise. Second is, obviously, as the level of wealth rises, the need for different asset classes, more diversification, higher return expectation, the awareness that you can generate return even by optimizing for risk. I think so as more awareness, more level of wealth, plus I think even the liberalization in the markets. Because, for example, till very recently, REITs and InvITs didn't exist. Till about 2012, AIFs didn't exist, right? So I think it's a combination of multiple things. One is level of wealth, level of awareness, changing market landscape, and obviously the change in regulation. I think all of these things have contributed. And the last thing which will never change, there's a very reputed e-commerce brand. I will not name names, but there's a very reputed e-commerce brand which you must have seen on TV. They advertised, what did they advertise? They said, Hindustani dil kehta hai aur dikhao. So that is also something which, because today, mutual funds do very well, but mutual fund has become a commoditized product, right? The last guy in the chain investing 100 rupees also invests in a mutual fund. There are many people in this room who may be investing 100 crores and they might think that why am I investing where somebody with $100 is also investing. So I think all of these things have played a role, right? And just to recap, it is, I think, level of wealth, different expectations, and rising awareness. Third, like I said, is changing capital market landscape, then the regulation, and the last is basic human nature, which seeks variety.
So the question from or क्या लेना चाहिए has now moved to और दिखाओ. So people are asking for more than what meets the eye.
Yeah, I mean that or dikha was more in jest. I mean, just said on a lighter note. But see, it's like this. In India, for example, real estate is a very big asset class. Correct. I mean, in my own anecdotal understanding, anybody who has 10 crores of financial assets probably has anywhere between 10 to 50 crores of real estate assets. Correct. Most people, despite having so much financial asset, they still have much more or as much real estate assets. Correct. But you can see that till now, all the HNIs in this room, for instance, must have been managing their real estate informally. कहीं कुछ जमीन पड़ा है, कहीं पे 4 दुकानें पड़ी हैं, कहीं पे 4 घर पड़े हैं, those kinds, right? But today you're sitting in BKC. I can challenge anybody in BKC. आप मेरे को एक commercial real estate का एक floor लेके दिखाओ. It's all Blackstone and Brookfield. Real estate is being managed a lot more professionally now, and unlike the past, it's no longer just few HNIs managing it informally. So what is happening is that clearly, or dikhao, I said on a lighter note, but I think the requirements is also changing. I mean, real estate is also, for instance, one of the biggest asset classes, which is now being managed formally with demonetization, with GST, with RERA. Plus people understand now that you cannot do real estate without leverage, and leverage is best done either in a corporate entity or a trust or a AIF or something like that. So that's just an example. And I think from all of those perspectives, I think alternates, that's the reason why alternates are gaining in prominence. The last thing I tell you, for example, private equity and venture capital. It's still nascent in India. It's not a topic for today's discussion, but passive investing, for example, is inextricably linked to the development of private equity. And I think if you take the US example, in India in next few years, even private equity will become very, very big. So I think all of this is tailwind for what we are discussing.
Great. Ankush, आप बताइए, when a client comes to you, या वो AIF या PMS के बारे में आपसे पूछते हैं, so what are typically the parameters that you tell them कि क्या evaluate करके उन्हें choose करना चाहिए?
See, because we deal in AI products and especially we target SME and microcap segment. सबसे बड़ा वाला myth आया था because the SME is evolving in the last 4-5 years only. इससे पहले SME के लिए लोगों का रुझान नहीं था. And need to understand, larger players have more orders, more revenue, more profitability than the smaller companies. बावजूद उसके, the smaller companies, the SME company delivered a much higher returns. When why so? Because we need to understand, if we are looking for a multi-fold kind of opportunity and high growth potential opportunity, where we can find it, where the company is having a potential to make their top line become bottom line, correct? And where we find this kind of opportunities, over the period of time, we can expect a multi-fold kind of opportunities. And that reflects in the number also. If you check the NSE SME Emerge Index returns, that index has generated 53% CAGR return in the last 5 years, despite last 15 months hard fought in SME segment. And the Nifty 50 has delivered just 12% CAGR return. And to evaluate this performance is justified or not, so I am evaluating the last 5 years SME's listed company's performance. The company listed from 1st Jan 2021 to 31st December 2025. There's 861 companies got listed. And the average top line growth is 37% year on year. And the bottom line growth is 65% year on year. And that reflected in the valuation also. Before 2020, the maximum IPO size in SME space is 20 crores. Nowadays, we have found 100 crores and 200 crores of IPO size in SMEs. And why? Because the valuation drive through the profitability, and profitability increase with 65% of averagely growth. And this is not for the listed companies. This is the same or higher growth we can see the companies planning for their IPOs in future or nowadays. So I suggest to all the investors to diversify, because this is the right time to diversify their portfolio. And why so? Because these companies actually having the potential to make their top line become bottom line, and that can generate a good returns. And when investors make portfolio into this over the period of time, they will realize this diversification will generate much higher return compared to the other segment of the markets.
And Akhil, I want to bring you in from where you sit at Motilal. आपका distribution landscape के ऊपर एक बहुत बेहतरीन view होगा. So talk to us about what investors are asking today, या फिर आप कहाँ traction देख रहे हैं in unconventional avenues of investing. In 2026, money actually move कहाँ होते हुए दिख रहे हैं?
So I think alternates, the entire evolution has happened largely over the last 5 odd years post-COVID, and a lot of wealth creation has happened in our country over the last 5 years thanks to equity markets and the kind of returns which have got generated. A lot of IPOs have also released a lot of capital to the promoters, so a lot of family offices have got formed up. So a lot of capital which got out of equity markets is so if you see that number of rich Indians also have gone up, you will have about 1 million Indians will be millionaires and more, and this growth will continue, right? So now once, like Ashi said, when you reach a size of 10 crores or 15 crores thereabouts, then investors do have higher risk appetite. Look at products which are non-conventional. So at base, your conventional products are mutual funds. For 2 decades, we have seen plain vanilla equity mutual funds like large cap, mid cap, small cap, flexi cap. These are the funds where large capital was getting invested when it came to equities. Even for fixed income, you had liquid funds, ultra short-term funds, and government securities, and all of those things. But over the last 5 years, you have alternates to equities, alternates to mutual funds, alternate to debt products. All of this is coming up into AIFs, PMS, REITs, InvITs. So if you are a fixed income investor looking for higher yields, I mean mutual fund typically will give you 6-7%, but if you want to make 12%, 15%, 18%, then you have multiple ideas. You can get into private credit. There was a speaker before who was talking about co-producer for movies. That's also an alternate to fixed income idea where you can get higher yield for higher risk you take. So those opportunities are available. If you're looking at long only equities, alternate to mutual funds, large cap, mid cap, flexi cap, then you have long only equities, Cat 3, which are more hedge fund style of investing, I would say, or trading strategies, derivative strategies, long short, all of those things. So those opportunities are also available. But the larger space, I think, which has gained over the last few years is the Cat 2, which is private equity, private credit, real estate. I think this part is the biggest part, which is almost now 10 lakh crores over 15 lakh crores of commitments in the AIFs. So there's a lot of interest in private equity, pre-IPO, hybrid kind of funds with listed, unlisted opportunities, because I think incrementally rich investors or investors with a higher investment pool want to, return is there, of course, it's all there on everybody's mind, but it's more of experience, which is non-conventional. And there's where these products are gaining a lot of traction, and the delivery also has been by and large good, positive, so which is also attracting more and more capital in this space. I mean, REITs and InvITs, again, I was just reading somewhere, it's almost like 10 lakh crores out of nowhere, and now with equity taxation, the popularity will only grow incrementally, right? So I think we are getting a lot of inquiries for newer ideas, unconventional ideas, and alternate to plain vanilla long only equities like large cap, mid cap, small cap, all of those things.
ऐसा कोई interesting niche idea that you'd like to share with us that you think has great potential and अभी तक वो ज़्यादा mainstream में या थोड़ा understated है अभी?
So according to me, I think like REITs for fixed income, I think it's a beautiful product. Small investors to large investors, you have access to it, and within REITs and InvITs you have multiple options, right? You can buy into like he was talking about, you can buy into A grade builders, or you can buy into CPSEs coming up, or small and mid cap side. So there are many opportunities within REITs and InvITs also where you can get fixed coupon plus possibility of making capital gains, and within that you can diversify across several sub parts of that. So I think this part is relatively not spoken too much, and now with the taxation being favorable, and even mutual funds will incrementally within their portfolios look at this asset class. This is something which I think one should also look at, especially when it comes to alternate to fixed income.
Interesting. Ashish, if today you had to allocate, let's say, 13% of your portfolio, 30% of your portfolio to unconventional assets, what would be on your list?
I would say private equity. And private equity is a spectrum because it is right from venture investing to growth to late stage. So clearly, and I already do. So for example, if I have $100 of a portfolio, and let us say it is predominantly equity, then yeah, 30% should be private equity, unlisted kind of stuff. That is one area. Second is, I myself don't invest in fixed income or hybrid, but I agree with what Akhil mentioned. For example, we ourselves manage AIFs which invest only in REITs and InvITs. Because if you look at mutual funds, it's not possible to create a thematic mutual fund buying only REITs and InvITs. That's not allowed. But if we want to do professional management, today for example, there are at least 15-20 different types of REITs and InvITs. Investing, like he rightly said, right from power projects to toll-paying roads, to commercial SEZs, to malls, the whole spectrum, right? So we ourselves invest in REITs and InvITs quite extensively. That would be one. Third, I already mentioned, I personally feel that real assets, meaning anything which is, for example, I said that a lot of people own real estate. I think if you manage it more professionally, it can generate much better yield with much lower risk. Because when people are doing real estate themselves, the kind of risk they are taking is very high amount of risk versus when they do real estate investing through a professionally managed AIF. If somebody is investing in real estate, the amount of money it takes to create a diversified portfolio runs in hundreds of crores. But if you invest few crores in an AIF, which is owning a battery of commercial real estate assets, and then in that they can actually create a leverage, and the rent pays the EMI. It's like a whole ball game altogether. So on your question, if I had to do alternate or different unconventional assets, to recap, it would be hybrid products like REITs and InvITs, it would be real estate, and it would be a good chunk in venture capital and private investing.
I would just, 100%. Just would like to add, as you were speaking, I was thinking, I think all of us, and there are all investors out here, I think one more asset class where we are underinvested is, from diversification perspective, is basically international equities. And now you have a plethora of options through GIFT City where you can diversify your equity portfolio across several geographies, whichever you like, and diversify your risk. In fact, you have options for equities, you have options on fixed income, and some very, very interesting ideas. We are also deliberating back end. But that is also now very, very important. Owning too much of Indian equities also could be risky, right? And now when so many things are available, you should ask your wealth managers for all the options, opportunities, and then eventually on your 100 rupees you have to see that how much is equities, how much is debt, within equities what's your diversification, within your fixed income what's the diversification, real estate, so on and so. So just wanted to add international.
Since you touched upon GIFT City, right now when everybody is talking about how India is looking so promising and it's poised to sort of outperform many EMs and even developed markets, do you think it is a good time to look outward?
Indians investing abroad?
Yes.
100%. That's what I'm saying, that there is a massive underinvestment in terms of diversification of equity. So it's always a good time, irrespective which market cycle we are sitting right now. When you're making an allocation, let's say 50% in equity, I would say 20% of that 50% should be in international equities. Start with US because that's the most evolved market which you can look at, and then you can get into emerging markets and other ideas. But that's need of the hour. I mean, when I look at my own portfolio, I feel that there has to be some amount of diversification in international equities.
Interesting. I want to also talk about investing in SME companies because that's also a really hot space. But I'm sure a lot of investors and a lot of attendees right now also out of the view that अगर main board companies available हैं, main board IPOs available है, तो SMEs में क्यों पैसा डालना चाहिए?
I think previously also I said, because no doubt SME companies have more numbers, more revenue, more profitability. But when you are looking for an unconventional way of investing and looking for a multiple kind of opportunities, because the larger companies cannot make their become top line. They cannot make top line become bottom line. But the SMEs having a potential to make their top line become bottom line, and that's created an unconventional opportunities in SME segment to deliver a higher side of return and multiple kind of opportunities. I understand a lot of people have this concern. The SMEs have a lot of risk. SMEs having a risk of volatility, risk of liquidity. But need to understand, when we are looking for a long-term investment point of view, where we get an access to enter in this company at very early stage, and after 3 years of time when this company migrate to the main board, it's actually creating a value to the investors. Even at this point of time also, already the 30% companies already migrate from SME to the main board. This shows actual potential of the SMEs. But when by the time when they migrate to the main board and when we plan to enter, then we'll go हम 12-15% का return expect करेंगे. We cannot expect a return like 2x, 3x or 4x. So entry into the SME space. So what SME investing is required? It's required patience, discipline, due diligence, and risk discipline. And why so? Because the volatility is less and high volatility, and also there's a low liquidity. So when an investor is investing in SME segment for a longer period of time, it always generates a much higher return than the unconventional way of traditional way of other listing segments.
You know, whether it's
Even I'll also share one very important data. So I think a lot of people think numbers are not coming. So this year, what we believe, there is a 3-4 companies will deliver more than 300 crores of PAT this year, this financial year. 10 to 15 companies will deliver 100 crores and above PAT. 30 odd companies will deliver 50 crores and above profit. This shows how their profitability is going to be increased. And when we entered at SME, especially at the pre-IPO stage or at the IPO stage, we actually, investor can get a full advantage of SMEs investing. The only thing is they require patience, require discipline, and hold for a longer period of time.
But I'm sure there are some evaluation parameters for this also, because just because an area is hot and you see a lot of promising opportunities, इसका मतलब ये नहीं है कि आप blindly जा सकते हैं इसमें. So what are the parameters that you need to evaluate before SME investments?
When you are planning to invest in SME segment, always looking at a sector which is supported by the government of India, where the government of India planning for a major expansion. So normally SMEs deals in a promising sectors. So when we have a government supportive policies, and because of the government supportive policies, either they get orders from the government side or from a larger player side also, because nowadays what happens, the larger players have more orders than their actual capacity. So they are giving a support to the smaller players, and because of that reason only their top line going to be increased in that phase. So we suggest only 2 things when investor plan to invest. Once, you always target those sectors where government of India planning for major expansion and spending. Second, only target those SMEs company where the QIB participation is there. Because many of investors come with me, Ankush, don't you think SME is a bubble? I said only one thing. There's a 1400 companies listed from 2012 to since now. And there's a 690 companies where the anchor participation is there. This anchor participation ensures 2 things. Number 1, there's some due diligence done by any of the AIF like us. Second, the liquidity is much higher than the company non-QIB. Correct? So when you are tracking these companies, you always find, so when the company gets listed, evaluate their performance, check their order books, because that is the key. This is how you come to know how their top line is going to be increased. So once you, because post listing, they have to upload their inform to the exchange, what kind of order book they have. So based on that, you'll come to know how their top line is going to be increased. You just choose your favorite sectors, then evaluating the company, verify their order books, and then plan to invest. So this is for the investors who plan growth listing, and when the investor planning to invest at pre-IPO levels, so AIF is the best route to invest, and they can invest through the AIFs which offer actually a pre-IPO participation in SME and microcap companies.
No, I was just going to segue into that because whether it's traditional form of investing or unconventional, DIY versus going through a fund manager route is something that is often debated. So Ashish, why don't you tell us what role is it that a fund manager plays in an AIF or a PMS situation and how that can make things a lot more simple and easier to navigate?
See, actually, it might come as a surprise to most people out here. Now, if you take passive, active, all the mutual funds. So, mutual funds put together, including hybrid funds, equity funds, everything. Mutual funds are, say, give or take 50 lakh crores, right? But if you take what I call non-promoter, non-institution, the retail holding in people's individual investors' demat accounts. So I'm not talking promoter, I'm not talking FII, I'm not talking BII, just individuals owning shares in their demat account is approximately 14% of our market cap, right? So 14% of our market cap would mean maybe 70-80 lakh crore, right? So most people will be surprised to know that after so much song and dance about mutual funds sahi hai and all of us running the whole country since last 25-30 years, still people holding shares, buying, selling, owning shares directly in their demat account is still bigger than all the mutual funds put together. So what does that tell you? That after so many years of efforts, after tax benefits, after spending hundreds of crores on mutual funds sahi hai, after talking so much about institutional management, after having 30 years of track record of mutual funds, after doing all of that, still people buying and selling shares in their account is still bigger than mutual funds. So इसका क्या मतलब है कि आप कुछ भी कर लो, ultimately there will always be some people who think that they will be able to manage themselves or who for some reason prefer to manage themselves. Correct? So I have a simple rule, I never give advice to anybody. So I never tell anybody कि आपको ऐसे नहीं करना चाहिए, वैसे नहीं करना चाहिए. I always tell people दोनों करके देख लो. Right? Now it's just a question of proportion. Right? What do you mean by proportion? That how much are you willing to entrust to a manager and how much you will manage yourself. Second is please keep comparing. And not only in up markets, the best time to compare what a professional manager has done in a mutual fund or a PMS, the best time to compare is from August 24 till now, which is Feb 26. For God's sake, don't compare from March 23 to August 24. From March 23 to August 24, I meet a lot of clients, I meet a lot of mutual fund advisors, distributors, wealth managers. In 2024, a lot of wealth managers used to tell me कि हमारा काम बहुत मुश्किल हो गया है. जब क्लाइंट हमको मिलने आता है, तो अपना 25 साल का लड़का या लड़की को साथ में लेके आता है और बोलता है तुम क्या कर रहे हो, तुम्हारे से तो अच्छा मेरा बेटा मैनेज कर रहा है. This is true story. This is true, right?
So ये common है.
This was happening till 2024. In the last 1.5 years, what has happened is that all the hot stuff of 2024 is no longer going anywhere. And the market has become such that if a mutual fund is managing a portfolio which is managed to beat the index by 4-5%. So see, our portfolios don't go crazy, meaning that if this is Nifty 500, there will be no way managing money to beat that index. We are not going to make a portfolio full of railway, infrastructure, PSU, defense, manufacturing, right? We will have some anchoring or some tethering. Like for example, you talk about White Oak, even the PMS has some anchoring or tethering to a BSE 500. We just don't create portfolio which is high deviation from benchmark. So the 2024 August से लेकर के फरवरी 2026 आपको पता चलेगा कि what is the difference between you managing yourself versus a PMS for mutual fund managing. And I think that people should not, I'm not trying to tell anybody, if I was not doing my CEO job, I would definitely manage some part of my portfolio myself. So I would be foolish to tell others that don't manage your own portfolio, right? Do it, but do two things. Decide what proportion you will manage and what proportion you will give to a professional manager. Second, keep comparing across all types of market cycles. Don't compare just in an up cycle, also compare in down cycle. And third thing, never forget one thing. You know, the biggest issue with demat statements, what's the biggest issue with demat statements? They don't tell you what is the CAGR, and they don't tell you how much the index has done. So when people refer to their demat statements, they are having almost romantic anecdotal conversations कि मैंने ये समय पे ये लिया था तो उसका देखो क्या हो गया, अभी उस समय में CAGR कितना आया, उस समय में इंडेक्स ने क्या किया. Lot of time what happens is that if you in March 2023 if you end up buying a small cap and in August 2024 you start believing I am the best fund manager on earth, then you should not forget that if you are in small cap it is enough. Everything in small cap just went up. So how much is your skill and how much is it just right place, right time? I think all of those, this happens with fund managers also. I'm not saying only with individuals. But what happens with fund managers will very quickly analyze and say कि जब तक small cap चला तब तक तुम चला, उसके बाद देखो क्या हो गया. But for your own portfolio also you need that critical analysis. So I would say that I never tell anybody don't do this or don't do that. I only say कि आप सब करके देख लो, then you see what works better for
But
you.
cautiously, I hope.
नहीं, सीधा बोलने का, आप सब करके देख लो. Because see, it's like this.
Dare to do it.
I have one simple learning. I am exactly 50 years old. I'll tell you an anecdote just for everybody, they'll find it funny. When I was 34 or 35, I had a colleague who was 45 or 46. So I was 34 or 35 and my colleague was 46. So I went to my boss, who was also 46. I went to my boss and I complained कि मेरा बात नहीं सुनता है. He doesn't listen. So my boss told me कि 40 साल के बाद है ना, कोई किसी का नहीं सुनता है. तो वो मेरा बात नहीं सुनेगा. तू 34 साल का है ना, तू सुन ले. So beyond the point, I don't think you can. Beyond the point, I don't think it is in our place to advise anything to anybody. Beyond the point, I don't think you can change anybody. And I personally said that if I was managing, I would I mean, I have regulatory compulsions. I can't manage an equity portfolio for myself. So if I didn't have compulsions, if I was not a CEO, I would manage my own portfolio, right? But I would then compare with what professionals are doing, and I would see that by managing it myself, how much value I'm adding, and how much value I'm subtracting. Because don't forget, I have a wife and sons. They will ask me, "कि भाई तेरा performance बहुत खराब है." क्या बोलेगा?
So that big picture is important, not just seeing
Big
your
picture is-
statement.
Yeah, the big picture is important. My family asks me returns.
I'm sure they're also answerable to somebody or the other,
They should.
whoever's watching.
They
But I
should.
think you want
Yeah,
to
I
say
just
something.
wanted to, so I'll give a little different spiel on DIY. So you guys awarded Ramdevji, right, for lifetime. How many of you know that over the last 12 years, Ramdev Agarwal, whom all of you respect quite a lot, has stopped investing in equities, direct equities, stocks. You all feel that he is all buying stocks and direct equity and all that stuff, right? So 12 years back in 2014, Ashish used to be CEO of Motilal Oswal. He collapsed his entire direct equity portfolio. Entire direct equity portfolio, I think it was 1,000 crores or...
His personal portfolio also. So Akhil and me have worked together in Motilal Oswal. Ramdevji had a standard instruction, even for the asset management company which we manage. Standard instruction was every month whatever free cash flow you make, मेरे को खाली scheme पूछ लेना कौन सा scheme में डालना है, but money has to go in the fund.
So our treasury money and the family office money of Motilalji, Ramdevji, all of this money incrementally over the last 12 years has been only invested in our own mutual funds, right? Which runs into several thousand crores, which I told you in the past. And apart from our own mutual funds, there are alternative mutual funds also, because we in the house have private equity, so they have put several hundred crores in private equity, private credit, real estate. So all of the publicly managed products across our different entities Our promoters have put entire 100% skin in the game, right? But if you jokingly ask Ramdevji that what is that you have achieved by doing this, because you have been a stock picker and all of those things, he said that life is easy. You have great professional fund managers. You don't have to sweat about tracking 200 companies individually and then deciding what to buy, when to buy, what to sell. So you have a few fund managers. They're doing the job. All you have to do is sit back, relax, and ask questions to them in terms of what the performance has been, right? So that is the experience of one of the finest investor in our industry when you talk about DIY and all. Now when he talks about SMEs, right? I mean, he has the skills to identify the right SMEs to invest in out of hundreds and thousands getting into 50, 60, 100. He'll do that job because eventually what a fund manager does is not all about return generation. It is also about managing risk, right? Which most of the investors often forget when he talks about tracking performances and all. It's not about trying to be the best performing fund manager. It is also trying to manage risk. So risk adjusted performance is more important than performance in isolation. Eventually, I can tell you with whatever little bit data I have tracked over the past, on an average, Indian investors actually, those who are doing direct, are underperforming the indices. There's a research done by Value Research, Dhirendra Kumar, and across large cap, mid cap, small cap, he did this work to just see what is the behavior gap, investor return versus investment returns. And what he saw was that an average direct or DIY investor is underperforming respective indices by 2 to 3%. Because, like Ashish said, in a demat, you don't have the underlying, you don't have the benchmark, so you feel you are doing good and only good probably. But to evaluate a fund manager is very simple, right? So I think your own portfolio you must experiment, decide an allocation, but track how you are doing versus markets and how you are doing versus professional fund managers. But when you have the best of the best fund managers available and you can sleep peacefully in the night, by outsourcing your job, then why to take stress of doing all of these things, So today also, if you see on a last 1 year basis, I think most direct investors in equities are grossly underperforming compared to mutual funds. तो म्यूचुअल फंड 2-3% कम देगा बहुत प्रॉब्लम है. खुद का पोर्टफोलियो 20-30% डाउन होगा तो वो चल जाएगा, right? So yeah, so this is what I want.
Well, very interesting perspective and life lesson also जो आपने हम सबको दिया 40 के बाद का. But I want to come back to that question. जैसे हम सालों से investor education, I will be when I'm on the other side of that number, hopefully. But valuable तो है. But जैसे हम सालों से बता रहे हैं, म्यूचुअल फंड चुनने की जो फ्रेमवर्क होती है या फिर जो इवैल्यूएटिंग पैरामीटर्स होते हैं, तो जब AIF या PMS पे भी पैसे डालने होते हैं, तो किस तरह से हमें how should we look at it and how do we choose the right person or the right firm for putting in our money?
See, I tell you, for most purposes, for different instruments. So I always tell people that the return ultimately depends on two things. One is which asset class we're investing in and who's managing it. Right? So whether it is real estate, whether it is SME, whether it is private equity, whether it is a hybrid structure like REIT, InvIT, anything it may be, the return is always made by what is the underlying investment and who is managing the money. So the asset class performance, the security selection, and who is managing the money, the fund manager. Obviously security selection is done by the fund manager, so those are the two things to keep in mind. Now when we look about AIF, PMS, mutual fund, these are only regulatory types of licenses. And different types of licenses are given for managing money in different types of instruments. Right? Because mutual fund license is given for giving investment in listed securities, mainly. Right? So that's why if you see whether it is fixed income, whether it is gold, silver, liquid basically, liquid, listed, open-ended. Mutual funds cannot lock in your money. So liquid, listed, open-ended, that is mutual fund. Then obviously you have illiquids like SME. Then obviously you have the deep end of illiquid, which is venture capital. So there are different licenses for different purposes, but ultimately return is always made from the asset class and the investment manager. Now why are you in a particular asset class? That is up to your requirement. Because on one end of the spectrum you can keep money in the bank, but then you know what the challenges are with relation to taxation and returns. On the other hand, you can say that, okay, I want money in fixed income, but definitely I want to do better than a bank. So then you say, okay, why don't you buy this AIF which will put money in REITs and InvITs, because REITs and InvITs, they can give a hybrid return of 7-8%. But what happens is you're holding property, every year the rent goes up, the leverage may change, the occupancy level may change. If the general level of yields goes down, then there can be relative appreciation in the properties. So what will happen is that you will have fixed income, then you will have some things which is fixed income plus. Then you will have stuff like credit. Then you will have credit, but credit with real estate as an underlying. So that may be even more risky or maybe even higher. So there is an entire spectrum out there. But so you need to be very clear which part of the spectrum you are investing in, why are you there, what are you expecting out of it, right? And then, so once you decide which spectrum or which part of the spectrum you want to get in, you decide that, then you see who is the best manager to be in this place. I think that would be the right way to go about it.
So pretty much जैसे म्यूचुअल फंड में भी होता है, आप अपना गोल और अपनी एपेटाइट देखिए.
हाँ, लेकिन क्या होता है, once somebody asked me कि लोग फंड कैसे सिलेक्ट करते हैं, तो ऐसे देखो दुनिया में 2 तरीके के लोग होते हैं. एक वो होते हैं जो लास्ट 1 ईयर परफॉर्मेंस देख के फंड सिलेक्ट कर लेते हैं. तो वो लोग दूसरे कौन से होते हैं? ऐसे दूसरे लोग अलग होते हैं. वो लोग YouTube में सब वीडियो देखते हैं, टीवी में सब इंटरव्यू देखते हैं, फिर विकास को पूछते हैं, फिर उसका फैक्ट शीट देखते हैं, प्रेजेंटेशन देखते हैं, पूरा रिसर्च करके फिर लास्ट 1 ईयर परफॉर्मेंस वाले को पैसा देते हैं. हाँ, तो सो वो भी
अगर किसी को फोर्थ कैटेगरी में आ रहा है.
I'm telling you this on a lighter note just to tell you that people get very, they do all, क्योंकि ये क्यों होता है पता है आपको? क्योंकि लोग रिसर्च और तहकीकात भी उसी का करते हैं जिसका 1 ईयर परफॉर्मेंस अच्छा है. Have you ever seen anybody doing deep research on somebody whose last 2 years performance is pathetic?
Unless you're invested.
उसका कोई research नहीं करता, right? So what I'm saying is that you have to decide which part of the spectrum you want to invest. Then you have to decide who is a good manager, and that's a very difficult job. That is why Vikas has a job. That is the whole point. और मैं हमेशा लोगों को लाइटर नोट और एक चीज़ बोलता हूँ, 500-600 अच्छा स्टॉक है. 500-600 अच्छा स्टॉक खरीदने के लिए 500-600 म्यूचुअल फंड और AIF है. So it's not easy to select.
एक और चीज़, 1 साल का परफॉर्मेंस देख के खरीदते हैं और 1 साल का परफॉर्मेंस देख के बेच देते हैं.
Statistic, you will be shocked. See, you should check. You will be shocked to see one statistic. Just I'm adding to what Akhil said. Very important point. Do you know in August, PMS AIF का शायद ये छपता नहीं है, इसलिए मैं म्यूचुअल फंड का एग्जांपल दे रहा हूँ. But this happens in all categories. Mutual fund industry का website amphiindia.com. I would urge all investors to read that website for a simple reason. उसमें Amphi monthly देखिए, आपने 100 बार सुना होगा. Be greedy when others are fearful. Be fearful when others are greedy. ये statement का linchpin is the word others. Because what is Mr. Buffett saying? कामयाब निवेशक होने के लिए आपकी गिनती others में नहीं होनी चाहिए. इसका क्या मतलब है कि आपको जानना चाहिए ना others क्या कर रहे हैं, और फिर others जो कर रहे हो अपने को नहीं करना चाहिए. That's what he's saying. तो others क्या कर रहे हैं पता कैसे चलेगा? Now our industry publishes that data religiously every month. So if you go to Amphi website and see the monthly report, do you know in August 2024 mutual fund industry, and this would be happening in PMS AIF also, उसका data नहीं है इसलिए मैं mutual fund का example दे रहा हूँ. In August 2024, equity plus hybrid mutual funds, the net inflow was approximately 30,000 crores. So currently out of 30,000 crores, 13,000 crores was just thematic and sector funds. And those thematic and sector funds were manufacturing, PSU, railway, defense, infra, वो सब. In August 2024, most people didn't know silver ETF नाम का कोई चीज भी होता है. और gold ETF में कितना आया था मालूम है? 1,000 करोड़. Okay. You fast forward to December 25. In December 25, sector fund and thematic fund का net inflow कितना था मालूम है? 13,000 का हो गया 900 करोड़. और अभी recent past में gold और silver का 1,000 का हो गया 13,000. और silver जो zero था वो हो गया 9,000. So imagine that when sector funds and thematic funds, when stock market was at the peak, entire money went to sector funds and thematic funds. Nobody spoke about gold and silver. When gold and silver, so इसीलिए हम लोग 1 year, we're not trying to just make a joke about it, but ये 1 year return का he gave example, I gave example is because सब कुछ करने के बाद people give money to the someone whose last 1 year return is good. And I think because your question was how to select, that's why I spoke about where you want to invest, who's the best manager, why you are getting into that. वो सब पे ध्यान देना मैं इसलिए बोला because if you don't focus on all of that, ultimately people invest based on 1 year performance, which is very detrimental to the wealth.
I also add in this because AI product have a longer lock-in and limited exit options. So it is very, very important to, and in AI returns completely depend on fund manager skills, discipline, and what kind of returns risk control they have. So always track the past track record of the fund managers and the investment process, what investment process they follow, and the how they protect the capital in the downside of the market. So when we evaluating all these things, then finalize. Another thing is because AIFs offer multi opportunities. So they offer venture investments, early stage, mid stage, late stage. So investor first analyze what kind of risk they are ready to take, and then evaluate which fund is best suited. It's a late stage of fund where the risk is much lesser than the compared with the mid stage or the early stage of company's investments, and then final their investments.
इतना सब आपने बताया कि रीसेंसी इफेक्ट है या फिर जो भी कॉमन मिस्टेक्स है, बट ऐसा कुछ स्टैंड आउट करता है. माय क्वेश्चन इज टू यू इन टर्म्स ऑफ कॉमन मिस्टेक्स दैट पीपल टेंड टू मेक. वन इज दैट 1 year का हमने पास्ट परफॉर्मेंस देखा और उसी में उसको चेज किया है, उसको उसमें पैसा डाला. बट स्ट्रक्चरल इन्वेस्टमेंट, ट्रेडिशनल इन्वेस्टमेंट हो या AIF या कोई भी अनकन्वेंशनल एवेन्यू हो, इज देयर एनी कॉमन pitfalls या mistakes जिससे investors को aware रहना चाहिए?
Yeah, I think I would say that if your portfolio size is slightly smaller, then be careful when you choose unconventional products. Let's say you have 5 crores, then you have to be very choosy that how much of this portion should be in unlisted or pre-IPO or SME. These are very, very high on risk asset classes. So what percentage of allocation on the overall portfolio you are giving to the highest risk asset class is very, very important. So just because of FOMO, and we have seen in the last few years that there are many distributors who are actively pushing a lot of unlisted stocks, right, of variety of companies, and without understanding, these are available in smaller lots of 50,000, 1 lakh rupees also, and a lot of people are blindly buying a lot of these companies without understanding business, without understanding valuations, right? Will they ever make money? Will they not make money? Because if something is available so freely, there's a problem out there, right? So all these things, I think one has to be very, very careful. So deciding which fund manager, which asset class, overall asset allocation, I think these are variety of things, but I would suggest that individually it is very difficult to think about all of these things. So fortunately there is a lot of help available. There are distributors, there are advisors, there are platforms. Take help. It comes virtually free of cost, right? And take a prudent decision and be very, very long term in whatever you decided to see. End of the day, I want to leave only one message. I'm an investor, all of you are investors, and we need to fit this in our mindset. Is at the end of the day, over a long-term period, which is 10, 15, 20 years, ultimately आपका index plus minus ही बनता है, right? So if the index gives you 12-13%, you will make 15-16%. If you're very lucky, you will make 17-18%. So ultimately आप you may chase a asset class or a fund manager who's given 30-40% return, and you may buy a lot, but you don't earn that. You may feel that you are earning that, but when you are a long-term investor over 10-15 years, ultimately your portfolio will CAGR around 15-16% only, and that's a beautiful return. You're doubling your money every 5 years, right? So return is important, but before the return comes, there are many things which are important, which one needs to pay attention. So your risk profiling, your asset allocation, these are some of the things you should spend a lot of time, whether you are doing it yourself or whether you take help from somebody.
Now, risk is one thing. how do we perceive that? Ankush, I'll start with you. अगर एक unconventional या फिर AIF alternate avenues of investment में कोई invest करना चाहते हैं, तो how should they perceive risk vis-a-vis a traditional form of investment?
So, as Akhil said, normally the people have invested. Sorry, as Akhil said, people have invested in unlisted market shares where they don't understand the business, don't understand the valuation as well. And this is where the AI role comes, because we invest in primary round of the companies. We are not participating in the secondary round where the valuation is much higher. Even sometimes the valuation goes crazy. People we don't have an idea why the price is going up and down. So we suggest the AI is actually reducing the risk if you are planning to invest in a pre-IPO investments, because the participation at the primary round means the investor get an allocation directly from the company through the AI route. So the valuation always given a comfort zone to the investors rather than participating in the unlisted market. Second, what we suggest to the investor, always invest in a fair market, not in the greedy market. As Ashish also said, कि gold silver बढ़ने लग गया तो 2025 में तब suddenly the inflow increase in gold and silver investments. But when we invest in the greedy market, we always identify the investor will not make the money. So always invest in fair market if your horizon is long term. You always makes money. That we have seen in 2008 also. We have seen in 2020 as well. The investor who made investments in the downside of the market, they made phenomenal returns.
Yeah, one thing Ashish used to say a couple of years back, when you're allocating money, you need to have a counter-cyclical mindset. Like he's rightly alluding to also that something which is not done well is where the valuations are lower. That's where the opportunity is getting created. And if you have a forward-looking mindset, then don't sweat about what has happened in the past 1, 2, 3 years, but what is likely to happen as the asset class will rotate in terms of performance. So have a counter-intuitive mindset. What is done well in future will consolidate, and what has not done well in the recent past, there is a stronger possibility of the mean reversion to happen. So in fact, you have to think very differently when you choose the asset class and funds and many other things, whatever you do in life.
Interesting. Any closing comments from you?
No, nothing to add.
And you've said all that was anything.
One thing, when an investor plan to invest in equity, it doesn't matter if it's a private equity, listed, or the secondary, invest for a longer period of time. Because the longer you invested, the higher probability of getting a much higher return is always there. So in equity, always invest for a longer period of time.
Wonderful. And on that note, I want to open the floor for some audience questions as well. If you could raise your hand, we'll pass on the mic. Please introduce yourself and say the question and whoever it's directed to.
Mohammad Panajwala, I'm an investor for the last 30 years. Seen all the ups and downs. Just one quick question where there was a fleeting mention of the alternate classes, gold, silver, commodities and SIFs, maybe some comments and reviews. Anybody?
Yeah, so definitely, SIF is it's going to add a lot of value to what risk and return combination that one can bring on the table, especially when fixed income. So within SIF also, you must have already seen few of them have launched, and you must have seen the entire spectrum. There are some people who are saying that they will try to beat fixed income by 1 or 2 percentage points or try to do better than arbitrage. Personally, if you ask me, I find a lot of value in those kind of structures, because in today's world, if somebody can deliver 8% in a tax efficient manner, that's a very good return. The reason is because banks are giving you 5-6% and they are fully taxable. So in today's world, either you have, on one hand, you have stuff like private credit, private equity, and listed equity and unlisted equity and all, which is all aiming for double-digit return. And the other end, there is 5%, 6%. And I think for anybody to get some 8-9% on a tax-efficient basis is a very good number, but it's very difficult to construct the way all the asset classes are placed. So from that perspective, I think specified investment funds are a very attractive proposition. Now within that, you must have also noticed that some people are trying to create products which are, taking some unhedged positions, like trying to take a long call and a short call or a combination. And you've seen some of them have been giving negative return for the last few months. Now, I personally feel that people who are managing aggressive strategies, and with all the song and dance, ultimately if they give return like a balanced advantage fund or a multi-asset fund, then what is the point of all the complication, right? If I can just deliver 10-12% by mixing debt, equity and gold, or if I can deliver 10-12% just by buying equity when it goes down and selling equity when it goes up, keep flipping money between debt and equity. So by doing simple things, if I can generate 10-12%, then why would somebody take the risk of all this long position, short position and so much complication? So within SIFs, my favorite is the category which delivers, and I can be neutral because we don't manage any SIF. So I don't have any favorite from that perspective. Whiteoak doesn't manage SIF. I'm purely talking as a third party like you. So from my perspective, anything which gives couple of percentage more than fixed income has a lot of value. The other thing which seems like very exotic, वो इतना exotic करके ultimately balance advantage fund का या multi asset का return देने वाला है तो फिर it's not going to add too much value. That's what I personally feel.
Yeah, I can just add that prior to SIFs coming in, these kind of option strategies or long short strategies were experimented in AIFs, Cat 3, but within the AIF it was tax inefficient because to the extent of what you were doing on the derivative side, you were fully taxed, which is now not taxed in a mutual fund format, right? So that post-tax efficiency, tax was a very big component. 41% tax on your option positions was really eating away into a large part of the return, right? So I think that those kind of products in a tighter regulations with limited exposure to unhedged positions to the extent of 25% will reduce your risk and will allow managers to give you superior post-tax risk-adjusted return. On gold and silver, I think a lot has played out, but I think given the geopolitical situation and the geoeconomics which is going around, I think a static or a strategic 10, 15, 5 to 10% allocation at all points of time. I mean, you can't predict when these cycles will play good or bad. So just have a strategic and a core portfolio allocation of 5, 10 or 15%, that's it. Higher to gold, slightly lower to silver today if we speak, and just be there. I mean, you can't predict how these assets will play going forward. Short term may be positive, long term maybe it will average out.
Good afternoon. I am Anand Dalmia, an investor from Hyderabad. I have two small questions. First one is for Ashish ji. Regarding this private equity investment, since it's a grey area and we have a very limited information, when we have to select a fund manager, what are the 3-4 important criteria we need to evaluate to select a good fund manager to invest our money?
So I think that within, clearly within this also, what is happening is that you have to look at the fund manager's track record. I mean, it might be that, see, in mutual funds what happens is that there is a published track record. So if a person is working in a particular AMC, you will know how the schemes they perform, how they manage, how they returned, how they perform, the public data is available. Even if that person is new in the AMC, still previously where that person was working, what schemes that person was managing, that is publicly available. Within private equity also, it's a similar thing. Only thing is that in private equity what happens is, it's quite normal for 1 or 2 or 3 managers or any manager to quit his job and set up his own private equity fund. Right? There are many which are more boutiques rather than, and like managing, see, if it's a venture capital fund, then a lot of them are quite boutique-ish in nature, meaning that somebody with track record setting up a 500 crore fund and investing in companies which are literally at startup stage, correct? Then there will be something which we call growth oriented or growth equity, where people are not investing at startup stage, but investing with companies which have some product market fit, companies which have some revenue, and they want capital to scale and reach a particular profitable scale. Right? So there are venture funds, growth funds, then late stage, what we call pre-IPO, etc. Then comes the SME and all, and then there is listed. In each of this, so venture funds, it's very normal to have a very boutique kind of thing, where there are one or two guys who are managing 400-500 crores. So you have to see, is this the first fund they are managing? Have they managed a fund in the past? What was the track record of the previous fund? Irrespective of whether they were in the same company or different company, you need to get what type of companies they have seeded. How many of those companies have actually seen the light of day and actually scaled to a particular level? So just like we do for mutual funds, for here also you have to call for their past experience, past track record, their success stories. Irrespective of where they were working, you need to dig into the past. Right? One thing I'll tell you is that in private equity it's very important. You keep in mind that what happens is the first time somebody raises a venture fund, it might be 300 crores. It's successful, next time they raise a fund, 800 crores. Successful, next time they raise a fund, 3000 crores. अभी क्या है, वेंचर फंड 300 करोड़ का इन्वेस्ट करना और 3000 करोड़ का इन्वेस्ट करना इज अ कम्प्लीटली डिफरेंट बॉल गेम ऑलरेडी. सो यू ऑल्सो हैव टू सी कहाँ पे मैनेज किया, क्या ट्रैक रिकॉर्ड और किस स्केल पे वो ट्रैक रिकॉर्ड आया है. राइट. सो ऑल ऑफ दोज थिंग्स वन नीड्स टू see, and of course, you know, organizations like Vikas, they will be having more data of each of these people. You have to be more careful in this, because इसमें क्या है, म्यूचुअल फंड की तरह आप रिडीम नहीं कर सकते. You're stuck for the next 5-7 years. So it has to be a smaller portion of your portfolio. It has to be something which you can forget about and sleep over at night peacefully, because it's not something which is, you know, you can't just redeem. But there is one beauty about private equity, which is that 2-3 things. In India, what is happening now, we are still lucky कि भाई 4-5 हज़ार करोड़ में भी IPO आता है अभी भी कंपनियों का. आने वाले 10 साल में 4-5 हज़ार करोड़ का IPO सब बंद हो जाएगा, सब प्राइवेट इक्विटी हो जाएगा. The reason is because you can see, you know, see in India now, समझो you have seen some companies, I cannot give names, but you have seen some company, it was with private equity for 15 years. IPO आया सीधा 70,000 crore. Another company in private equity for 10 years, IPO आया straight listed at 1 lakh crore. Another company IPO 78,000 crore. Now the biggest company we are talking about, IPO will come in lakhs of crores. When companies IPOs come and listing is straight at 1 lakh crore, 3 lakh crore, 75,000 crore, who do you think makes the returns?
Promoter.
Venture capital. The promoter, of course, उसका तो हक बनता है.
And the initial investors.
See, one thing I am clear, promoter का पैसा नहीं बनेगा तो हम लोगों का किसी का कोई कुछ नहीं बनेगा. That's very clear. Because promoter is the guy to really respect. Because these are the people जिसके ideas इनके capital से बड़े हैं. Investors जो है ना, who is investor? Investor is people who has more capital, not enough ideas. The promoter is the real rainmaker, because he is the guy who has ideas bigger than capital. Even Mr. Ambani's ideas are bigger than the amount of capital he has. He's the richest person here, but still his ideas are bigger than the capital he has. And most of us are sitting around here talking because our ideas are smaller than the amount of capital we have. Promoter को तो बनेगा ही, बनना ही चाहिए. But when companies come at a certain scale, then you will realize that public market को तो उसका EPS growth का return मिलेगा. पूरा early revenue, growth, PE multiple, सब private equity और venture वाले को मिला है, right? So there will be a time when the alpha in listed market starts migrating to private market. So anybody who has high return expectations, long time horizon, deep pockets, they should, apart from listed market, they should seriously start looking at unlisted market. But you have to be very careful, because money gets locked for 5 to 10 years, 12 years. So you have to be able to put money which you can forget about. You have to do good diligence and stay the course.
Thank you so much. If I may, a small question to Akhil ji.
We're short on time actually.
Yeah.
Let's keep it one per person, please. You can ask him offline.
Yeah,
Thank
definitely. Thank you. Akhil ji, when we talk about asset allocation to international market, we see many fund managers telling international mein you have to have 15 to 20% of exposure. Now, I am asking why not 30 to 35% exposure, like India mein 60 and international market together, entire thing 40%. Why not that? And why only 15 to 20?
You can have 30-40%, you can have 50 India, 50 outside India. It's completely your personal choice. Starting point could be 10-15%. And but if you feel that your belief on US economy is much better than Indian economy, then you can over allocate towards US, or let's say these days emerging markets are doing very well. So your underlying belief on which country's equity you want to buy, depending on that you can moderate your asset allocation, but there is absolutely no compulsion about 5 or 50. Short answer, Vikas.
Yeah, thank you.
Hi.
You have multiple questions if you don't mind.
Hi, my name is Samir Shah.
Hi.
I am 2-decade investor. So my question to all three of you. So everyone is talking about a long time horizon. So when do we have to exit? Because the Motilal Oswal that firm is previously the buy, hold and long lasting, but now they also drop that plan. So just answer my question.
See, Buffett answered this question very well. You should invest when you have money, you should remove when you need money. And when you need money, you can be lucky or you can be unlucky. So till such time you don't need money, you don't exit. You just remain invested, right? Other thing what Ramdoji says is that you should have an exit strategy. Let's say if your desired return is X, let's say it is 15%, when you achieve your 15%, you take a call whether you want to exit or you don't want to exit. So if your return goal is achieved, you exit. You need money, you exit. Till such time, stay put.
Okay, Mihir Mehta. I've been an investor since 25 years. Ashish ji. Yeah, okay. So, a lot of statements are given. So, Indian investor वही है, bottom line, कितना देती है, you know. So, as you said, mutual fund में the fund manager का target है benchmark से 2-3% भी दे दिया तो मेरा काम हो गया. Because a lot of retail investors come from FD, gold and तो उनके लिए वो 12% के आसपास भी it's okay. But when it comes to PMS, you know, let them HNIs, you know, they already have a lot of the avenues where they are making, you know, good returns. So what is the fund manager over there? यहाँ क्या आपने बोला कि fund manager 2-3% दे दिया alpha, happy investor. Here why? Because it's varied. I mean the returns have been like in 2024. There are few companies, I mean tens of them, we are taking 100% returns, okay. And there are companies with even in bull market of 24 has given 30-40%. So the fund manager क्या envisage करता है, you know? ऐसा इसमें fund manager का 2-3% हो गया तो ठीक है. तो here what do they envisage and how do they work, you know? The mindset of the fund manager कि कितना मुझे करना है, you know, देना है basically.
So, first thing I'll tell you that, you know, assuming we are speaking about only equity right now, I just want to clarify one thing. When I said about mutual funds, that, you know, we are benchmarking and we are trying to beat the benchmark. It's not that the target is to give less return. That's not the idea. It's not that the target is to give 2-3% alpha and chhod do. That's not the idea. Basically, what I was trying to say is that ultimately mutual fund is a retail product. Correct? In a retail product, we need to be mindful of what type of variability of alpha or what type of variability of return our strategy is infusing into the client's portfolio. So for example, in a mutual fund, if I manage a 15 stock small cap portfolio, तो BS जो small cap index है उसमें 250 stock है, फिर भी वो किसी साल में 30% ऊपर 30% नीचे चलता है, which means the best performing stock might be going 5x and the worst one might even becoming half when the index delivers 30%. So you know for a fact that if you manage a 15 stock small cap portfolio, you can be kabhi jannat mein kabhi jahannam mein, that much variability will come, which doesn't work for a mutual fund investor. So I was not trying to say that in a mutual fund we are happy to just give 2-3% more than benchmark. We would like to give best possible outperformance, but best possible outperformance without infusing wild extremes. We don't swing for the extremes. In fact, in mutual funds, from April 2025, SEBI has made it mandatory for us to disclose something called information ratio. It's uploaded on our website every day. This information ratio per force focuses the industry to track variability of alpha. So there is almost like a regulatory direction that when you are managing a mutual fund, you need to curb the variability of outcomes so that people can stay put and they don't get extreme experiences. That is the reason why I was talking about benchmarking and trying to keep returns in a range. Now when you come to a PMS, of course, everybody understands that there are investors with higher return expectation. In fact, I will tell you that in a PMS, because tax का भी disadvantage है ना, buying selling पे tax लगता है, तो alpha ज़्यादा generate करना पड़ेगा to overcome the tax hurdle. So that is clear. As a result, mostly in PMSs, what people try to do is to run strategies which have high deviation from benchmark. So predominantly, I would say less number of stocks, more concentrated positions, more illiquid, right? All those kind of things tend to come up. So it's not that, ultimately it is equity as an asset class. अगर मैं बोल भी दूँ कि मेरे को 100% return generate करना है, तो ultimately in equity nobody is controlling the outcome. There is a big role of how the market performs and also big role of within that market what stock selection has been done, and despite best intention, whether it's PMS or mutual fund, despite best intention, there will be good funds and not so good funds, all those things will happen. But yes, if the awareness is there that in a PMS and AIF, one is trying to do what they don't do in a mutual fund. The awareness is there that ultimately what type of audience is being targeted. And the awareness is also there that there is a tax hurdle. All of those things are kept in mind. That's why in PMS or AIF, we do only what we don't do in a mutual fund. That's the whole point. In a mutual fund, the key point is because it is retail, you want less variability of outcomes.
Hi, I'm Nimesh Vora. I've been an investor for more than 25 years. I just have a quick question. Rather than attempting to do asset allocation by ourselves, like shuffling between debt, equity, gold, would it be a better idea to go in for a multi-asset allocation fund instead?
Yeah, definitely it is a much more, it's better in 2-3 ways. One is generally I feel that individually we all will struggle to do asset allocation. क्योंकि एक multi-asset fund जो होता है, इसमें ultimately हमारा किसी का individual opinion beyond a point doesn't matter. Because we have mathematized or we have, put some models in place. Like for example, at a certain level we have to start selling equity and start buying gold, or start selling gold and start buying fixed income, all those kinds of things. अभी एक महीना पहले, our fund did not have any long position in silver. All the silver positions were only arbitrage, and the gold position came from 24 down to 11. तो मेरे को एक साहब ने नाराज होकर मैसेज भेजा कि आप गोल्ड तो होना ही चाहिए, आपने 11 कैसे कर दिया? मतलब क्यों होना चाहिए गोल्ड? बोलते हो तो हमारे शास्त्रों में लिखा है गोल्ड से बेटर कोई इन्वेस्टमेंट नहीं है। बोले सर वो तो शास्त्रों में सालों से लिखा है, हजारों सालों से लिखा है, कल थोड़ी लिखा था, आप आज क्यों मैसेज कर रहे हैं? So these kind of emotional hurdles come when, like for example, somebody told me silver में तुम खाली आर्बिट्राज क्यों कर रहे हो, लॉन्ग पोजीशन क्यों नहीं है? मतलब क्यों, क्या प्रॉब्लम है? बोलता है गोल्ड इतना ऊपर गया तो सिल्वर और ऊपर जाएगा। बोला क्यों? बोलता है इसका इंडस्ट्रियल यूज है। बोला भाई जो चीज का 50,000 रुपए किलो दाम है उसका इंडस्ट्रियल यूज मेरे को समझ में आता है। 4.5 लाख रुपए किलो का दाम होगा तो इंडस्ट्रियल डिमांड कम होगा कि बढ़ेगा? सो इंडस्ट्रियल डिमांड इंक्रीजेस वॉलेटिलिटी, इट डजंट इंक्रीजेस द हेजिंग कैपेबिलिटी. So what happens is that a multi-asset fund is better because irrespective of what WhatsApp chats we may have with somebody and what opinions we may be exchanging or shooting the breeze, the fund is following the model. And the fund is not going to listen to my opinion beyond the point. So it is always more efficient. It is also more tax efficient.
Last question, ma'am. On a lighter note, Vikas, I think all the people who have stood up and...
Vikas basically मेरे को बार-बार बोल रहा तू आंसर छोटा दे.
मैं तो स्टार्ट में बोला he gave all प्रोफेसर का आंसर. So
क्या बोलेगा? हाँ, मैं साहब ने पूछा कि मल्टी एसेट करने क्या बोलूँ? हाँ.
और आशीष, ये आज अभी आंसर ठीक लग रहा है.
सोच के पूछा होगा ना. उन्होंने बोला मल्टी एसेट करने का कि खुद करने का, तो मैं क्या बोलूँ? हाँ.
मल्टी एसेट फंड करना चाहिए. अगर एक साल बाद निफ्टी का रिटर्न 25% आएगा तो सब मल्टी एसेट छोड़ के फिर निफ्टी में वो फिर इक्विटी में चले जाएंगे, राइट? बट जितने भी लोग खड़े होकर क्वेश्चन पूछ रहे हैं सब बोल रहे हैं कि आई एम अ 25-year investor, 30-year-old investor. I don't know why you have questions first of all, right? In fact, you should come here and you should answer questions to those who need it.
But we are very experienced investors, so we should do an investor panel also.
Mr. Ashish, thanks a lot for educating us on how to select, the fund manager, what to see his past record, all that. That was really important information. My only question here is there's a lot of ambiguity when it comes to international markets, right? I personally feel US is overvalued. Do I have a premise for it? AI, there is a disruption. FANG and like those Mirai Asset ka jo FANG fund and stuff delivered great returns. Now it is again in the 12-30% CAGR range. My question basically is, if I have to invest today in an AIF or even in a mutual fund, international mutual fund, how should I select the right mutual fund or AIF to invest in? Criteria. Second, how do I evaluate within the plethora of markets that the fund is investing, which is the right market to go to? If US is overvalued, should I look at Hong Kong? Should I look at Korea? Where should I? How do I make that judgment? What are the parameters?
Yeah, so personally, I always divide it into three parts. One is India, one is US, and the second is, and by US, one would say Western Hemisphere, which is, there's not much by way of Europe or mainland Europe, but US and Europe, ultimately it ends up being more US or more global. So that is one part. US, global, Western Hemisphere, whatever you call it. The second is, of course, India, because we will always be over-allocated to India. It should be that way because we have familiarity, plus India has good goodwill. The third is emerging markets other than India. Okay? And on your question, right now, I agree with you that US has been on a tear for now 15 years. And it cannot be like one way. And I also agree with, for whatever my opinion is, I agree with your observation, which is about that US is stretched, right? So, but the place to really look at is emerging markets other than India. Because in last 15 years when US has been on a tear, India is the second best performing stock market globally. But emerging markets have got the short end of the stick because US has pulled a lot of the flows and the returns also. And emerging markets ex-India for three reasons. One, all commodity-driven markets like Middle East, Brazil, China itself. A lot of that falls where India does badly when commodities do well, so you find that in emerging markets other than India. Even if you take tech, outside US, the semiconductor, hardware, tech markets are South Korea, China, Taiwan, right, all of those. And if you see domestic economy, then other than India, Latin America, China, a lot of big economies are outside India. So yeah, I mean, I agree with your observations on US. If I have to invest outside India, I would invest in emerging markets.
I hope that answers all your questions. Thank you so much. You all have been great audience, and you guys have really given us all a lot of food for thought ahead of lunch. It's been a vibrant and very, very wonderful session. Thank you once again, all three of you.